I'm Jeremiah Boucher, a commercial real estate investor with over 20 years experience. This show is designed to help you build your business, become a better real estate investor, and help you see opportunities that will keep you ahead of the competition. This is Finding Your Edge.
All right, and here we go. This is the first ever interview on the Finding Your Edge podcast, so you know it's going to be good. You know that we have the right guest for this, being that it is the first real interview. Now, I know Jeremiah and I, we go back and forth, and we talk about our business and where we're going and how we found our edge and are continually finding our edge and sharpening that edge. Well, today we have a special guest. Before I introduce him, I'll give a little background. This gentleman, Warren Berzack, he is one of LA's top producing investment real estate brokers. He's done over $2 billion worth of sale, 500 transactions across 30 states. And the accolades are, you can Google this person's name and just, you'll see why he is who he is and where he is. And very lucky to have him on the show. But without further ado, welcome to the show, Warren Berzack. How are you, sir?
Good. Thank you, guys. Appreciate it.
Absolutely. Absolutely. So I know I gave a tiny background, but if you could, Warren, just go in a little bit about, who you are and what you do and maybe how you got started.
Sure. Do you want it to focus mostly on brokerage stuff or just kind of generally what I've done over the last 20-something years in real estate?
Yeah, we're excited about real estate, Warren. So, and especially your investment side. I mean, brokerage is one angle, but yeah, lay it all out.
All right, cool. So 2001, graduated from college trying to figure out what I wanted to do. And I applied to a bunch of different real estate companies, had interviews, or actually sent out resumes right before 9/11. So what a great time to send out resumes.
Yeah.
Had a bunch of different interviews, interviewed at a mortgage brokerage company, interviewed at the Irvine company, and that was more like a lease. It starts out as a leasing position. Interviewed at another company that owns a lot of 100,000 square foot plus retail centers, and interviewed with a broker in LA that specialized in multifamily and retail. And essentially all the opportunities, they didn't really pay all that well, the exception of the brokerage one, which was basically more entrepreneurial. And the guy said, look, if you follow my business model, if you listen to me and do, the 400 calls a week and a couple of meetings a week and then get proposals and listings and get closed deals, you can make six figures. And that sounded appealing to me. I read in college the cash flow quadrant. That's one of the things that got me interested in real estate. I thought, okay, well, look, I can learn from other people that have done it, that have bought and sold buildings, and kind of learn from the ground up from a brokerage standpoint, helping people do what I want to ultimately do, which is own real estate. And so I did that. And within 14 months, I had made over 100 grand. So that was my start in brokerage. And I started basically doing multifamily day one. Started in the San Fernando Valley, basically calling owners 16 units or bigger. And ultimately, the business model was always helping people sell multifamily, and for the most part, exchanging into triple net retail. Most of my clients are probably 50 plus, some up to like in their 80s. And I've had that same business model for 21 years. Even last year, I sold a couple of larger portfolios, and clients exchange into triple net retail all over the country. So it's kind of what I started doing. Bought my first building in 2005, bought a Jack in the Box in East LA for a 6.75 cap, and ultimately turned around and sold it for a 4.5 cap about a year and a half later.
Wow.
Paid 600 grand with my family. We took that money and put it in hard money loans, and did quite a few of those, making between 8 and 12%, and got back those funds 2008, 2009, 2010. Some of them we foreclosed on and sold. Some of them sold just because they knew they had the debt coming due and they needed to sell. And so we got all the funds back and then ultimately started buying apartments. 2010, bought my first apartment building, a little 12 unit, and went from there. And in the 2010 through 2013, I bought 5 buildings, about 120 units with a small group of investors, mostly friends and family. Didn't buy a lot of multifamily until 2016. I had some guys bring me into a deal they wanted to raise. They didn't want to put money in. They wanted me to raise the money. So that's why they brought me in. That was about a 70 unit deal. So now I'm up to about 200 units. Did a few triple nets. Also owned some triple nets, corporate, Taco Bell, Burger King, 2 Jack in the Boxes, a Raising Cane's out of state. Deals that made sense at the time and got good pricing on them. Remind me later, I'll tell you about the Jack in the Box in Baton Rouge, Louisiana I bought for a 12 cap. And then basically right when COVID started, I figured I'd have all the systems in place. I expected pricing to adjust just because buyers would exit the market. And so I sent an email to about 200 agents in LA that were transacting. Some I knew, some I didn't. Basically saying, look, I'm looking for a real 5 cap. I use 3% vacancy. I use 40% expenses. That's kind of what it costs in LA to realistically run buildings, despite what brokers tell you. And I started getting deal flow from agents all over LA. And I ended up buying almost 300 more units in the last 2.5 years. So the portfolio is about 500 units. I've got about 100, a little over 100 investors. Some as low as 25, some as high as $1 million in different deals. And so I've got that. Then I invest in other people's deals. I'm invested in some Jeremiah stuff, but I'm invested probably in about 50 other deals besides the 25 that I own. So well diversified. I like buying my own stuff that I kind of oversee as far as a management standpoint in LA. And then I invest out of state with other people to diversify. We've got crazy politicians and earthquakes and fires and all kinds of stuff in California. So, just in case shit goes down, I would like to have some of my net worth outside of California producing passive income. So, and I've done brokerage through the whole thing. My time now is split basically 50-50 between brokerage and management and kind of running my other business. A little less this year from the brokerage standpoint, just because brokerage, I think, has slowed down nationally with interest rates jumping as much and as fast as they have. So a lot of people sitting on the sidelines and tough to make sense of deals to buy. So right now I'm just spending a lot of time managing, doing some ADUs in some of my buildings. And that kind of summarizes me 20 years in 5 minutes.
Yeah, Warren, we have similar backgrounds in 01. I mean, you graduated college, I quit college, got in real estate. You got in real estate. You took some of the institutional route, right? Where you worked with one of the bigger brokerages. Was that Lee back then, or were you with one of the big ones?
No, I was at a smaller firm for about 10 years. They had a very similar model to M&M.
Okay.
Just did multifamily and retail. And there was when I started, there were 6 of us, 5 or 6 of us. And then by the time I left, I think they were in the 20s as far as people. And I've been at Lee since 2011, I believe. So.
Got it. Yeah, I'm curious. In that decade, that first decade you were in your career, I remember that time in real estate. And for me, I got wiped out because I was in single family housing in Vegas. I had some friends that were doing buying and selling multifamily or single family in LA. And you guys had this meteoric rise, right? I mean, from what I saw from the outside, what was that like that first, when you hit that boom you were ahead of it like me, 01, 02 up to, 8 and 9 when we had the economic issues. I was just curious what that was like when you were in the business.
So yeah, from a brokerage standpoint, I had some of my best years, 2005, 2006. Commercial, if you're doing sales, at least in my world in apartments, if you're doing 10 or 20 sales a year, you're doing quite a bit of business. I did 2005, I did almost 30 deals. I had 29 deals. So it was crazy busy. So much so that I stressed myself out and I got Bell's palsy. So like half my face
Oh
was,
my God.
Holy
was
crow.
paralyzed for a few months.
Holy shit.
But yeah, I mean, the business, I mean, I always think like, oh, if I had started in the 90s, I'd be further ahead. I think everybody that's young and starting in real estate feels that way, because there was a lot of business being done in 01 and 02 that I missed out on if I had started earlier. But you can always look at everything in hindsight. And obviously I was in school, so I wasn't going to start brokerage necessarily then. So, and then heading into 2007, 2008, when the market really kind of crashed. I mean, my best purchases were 2010. The highest caps in LA that I got was about a 7.5 cap, which is kind of unheard of. I mean, when I got into the business, GRMs were 6, 7, 8, and caps were, maybe 6-ish at the time because interest rates were higher. So cap rate, and then they were down in the 4s, and then they popped back up. And nobody was in the market. You could only get Fannie loans. That was the only way I could finance my first few deals. But there wasn't that many, like the single family market. I mean, like the Inland Empire had a lot of foreclosures, and Vegas obviously had a lot of foreclosures. And I had some clients that were going into those markets buying in 09 and 10. But the multifamily market, there wasn't that many foreclosures. I kind of started targeting lenders at the time, trying to build up a database of lenders that would be doing REOs. And honestly, there wasn't that much. For the most part, it was developers that had overpaid for land, and now the land wasn't worth what they paid for it. In the mid 2000s, the big craze in LA was condo conversions.
Oh, yeah.
Those guys got caught, kind of midstream with their condo conversions. And so those guys, a lot of those guys got foreclosed on. Those were like the big, and then retail, obviously, because the market kind of stopped as far as your mom and pops going out of business, you saw retail suffer a bit. But for the most part, multifamily didn't really see the foreclosures that they thought they would see. During COVID, people kind of thought, oh, we're going to see foreclosures. You didn't.
No. Yeah.
Unfortunately, most of the government stepped in slow, but they stepped in and started funding people's rents.
What was your angle? Oh, just Warren, sorry to cut you. I was just curious, what was your angle? What was your edge? I mean, that's what we call the show. So I was just curious, you made some money, you parlayed it into some good multifamily, and you had a lot of success over the years. I mean, where you're at, and you stayed pretty consolidated right there in Southern California or in LA for just this multifamily product until you stabilized it and then got it into triple net deals that were management very passive. What was that edge at the time? It's still a pretty competitive market. When I talk to people, they always say, wow, LA, that must be really hard. What did you do to succeed?
So it is hard to find stuff that makes sense. Those first few deals, I had the success because there just wasn't a lot of people in the market, so I could find deals that made sense. Like literally, there was no one buying at that time. Very, very few transactions. Kind of like the beginning of COVID, with everybody scared. I find and I've read this in many books, because you can see I've read a lot of books behind me, even more. A lot of the messages that people talk about, they made their money in down markets or kind of found their niche in those kinds of markets. That's kind of what I did when I started buying, and then even in COVID, expanding my portfolio. I've got a lot of clients that do the reposition. So in LA, we obviously have rent control. And so people are going in, buying out tenants, fixing up units, getting much higher rents than the units were getting before. Refinance, or they sell, they take that equity and put it somewhere else. So I have a lot of clients that specialize in that. I have some clients that just add to their portfolio. They're not as interested in cash flow per se. When I'm looking at deals, I'm much more interested in cash flow.
Yeah.
I want to buy something that doesn't make sense. And so the lowest in this last 2 years, the lowest return I took, and you guys probably will laugh at the 5% that you can achieve. In LA, I think conservatively running kind of the business that I run from my management business. I have about 25 employees that kind of oversee the on-site and the maintenance. But it wasn't like any sort of rocket science. It was just looking for deals, building relationships with brokers, explaining to them that I don't want to represent myself. They'll get their own fee. and getting that deal flow and finding deals that made sense. And so a decent amount of the deals I bought were already renovated, and there's a smaller buyer pool for those deals because people generally want to see like lots of upside. So you'll buy something that is 30-40% upside in rents, but when are you going to achieve that? It's rent control. How long is it going to take to get that? Unless you're aggressive and targeting and doing what some people do, buying out tenants and really spending a lot of money fixing up buildings. Me being distracted with the brokerage business, I can't follow that model. That's just too management intense for me, because I have a very small operation from a kind of a management side. Like, yeah, I've got my maintenance people and I've got my on-sites, but in the office, the people that are doing the behind the scenes, it's very small. It's just a couple people. Sorry. So
with self-managed.
My edge,
Okay,
yeah. So my edge is self-managing, really
that's right.
keeping an eye on everything that's happening in the buildings. Every day I'm talking to my employees. So I don't have a big infrastructure. I've got buddies that own management companies and they have 100 employees, 200 employees, and it takes some of the load off the owner or the people at the top. But I feel like they're a bit removed from the realities of what's happening on the ground,
Right.
especially through COVID with the amount of eviction stuff that we were dealing with, the amount of time it takes dealing with the different agencies trying to get tenants rent paid, whether it's the state and going in circles with them, and really only being able to do everything via email, or dealing with, in LA, there's a lot of organizations that were trying to house people, whether they're housing insecure, maybe borderline homeless, or just people that were struggling that you could go to for help. So that was like a full-time job trying to get, we probably collected, I don't know, 200,000-300,000 over the last couple of years from different agencies or the state, as far as, or the city, as far as rents covered for tenants. And it took a lot of time. So, I was heavily involved with all of that stuff, and whether it's good or bad, it's up to the person to decide how they want to run their business. But I felt like I own a decent chunk of every deal that I bought, and it's part of why people invest with me. I've got quite a bit of skin in the game. Some buildings I own 10, some buildings I own 20% of. Some buildings I own more, some of the first few. So I just spend a lot of time kind of talking to the tenants, strategizing how to get them help, or even with evictions. The eviction moratorium still isn't lifted in LA County, which affects the city of LA as well. But I've been evicting tenants since April of last year. And we've had some good success. And some we had to pay to leave, some we simply were able to get out because they just didn't want to deal with the evictions and having it on the record and stuff. So every tenant's a little bit different. So to answer your question, what's my edge? I feel like managing my own stuff has been my edge. I feel management companies in general just charge a lot more than I charge as far as labor. And
they don't care as much.
Yeah, they don't. It's not their money.
Yeah,
I mean,
no.
I have some stuff in deals where I kind of see what the management companies are doing. And they don't care.
Warren, I think that's a great point with, managing yourself, but also being that, and I'm just assuming that when you say you're 10, 20%, you were syndicating some of these deals as well?
Yeah. So friends, family, some clients, and then I've been in every deal. I probably get 5 or 10 new people interested.
I think that speaks very highly of the syndicator, that you are in the trenches, right? And you are doing the emails because I get it. Listen, I'm in New York. I'm in upstate New York, and that might be another edge, is that people are not investing so much in California and LA and New York, and maybe that's its own thing, right? You don't really hear about a lot of that being talked about on the podcast or on the websites. It's always the Southeast and Texas. You don't hear about, hey, LA is hot right now, right? Everyone says get away from LA. So that could be another edge that you have, is that, well, this is where I was, and this is where I was multifamily focused. I, cut my teeth for 5-10 years, understanding this market, finding what a deal was. And then when I did buy, I had a management team in-house, and I was willing to get dirty, right? I was willing to go and make the phone calls where you could maybe hand that off to somebody for 10, 15 bucks an hour. But when we're talking real rents, where it's really going to impact your returns, I'm thankful that there's people like you that are syndicators that are doing that type of stuff. I think that's incredibly important.
Yeah, I think it's led to a lot of referrals from my existing investors, and I hit the benchmarks that I'm trying to hit as far as my structure is very simple from a syndication standpoint. So yeah, I mean it's definitely helped grow, and I've never had an issue raising money. This last year I had a deal that was about, and some people are doing like I've got friends that do $100 million, $200 million deals, and they raise it in the blink of an eye. Whether they've got connections or they've just got past deals that they've got one investor they go to or 10 or whatever they go to. But I've got lots of 25, 50, $100,000 investors, people that don't understand the business at all, don't know where to go, don't know people that they trust. And I've seen other people invest with syndicators where they got burned, whether it was timing or the asset didn't perform because the guys weren't on the ground doing what they need to do. So everyone's got a different business model. Mm-hmm. I'm sure I could have some gigantic model and be traveling all over the country buying in 6 and 7 cap markets, and I just didn't want that brain damage. Not that it's a bad thing. It's just I didn't want to. Jeremiah's like on the plane all the time traveling to his portfolio. Personally, I didn't want to. With doing brokerage primarily at the time, it just wasn't a business model. I wasn't willing to take a foot out of brokerage while schlepping all over the country, finding deals and doing that. So, or building an in-house infrastructure, right, and managing a lot of people, right, doing that sort of stuff. So like distributions and stuff, like Jeremiah, I know you use Appfolio. I use Appfolio for management and distribution, so it's nice and synced up. I'm behind the scenes doing all that stuff.
Yeah.
Just gives me a heartbeat of what's happening in the buildings and then with my investors.
I mean, it's just textbook, Warren, where I admire what you're doing. I mean, when people look at investing in real estate and they see people having, I mean, what would you say the average unit price is of a apartment or a unit in LA now? I mean, I know that's a pretty broad question.
It depends on the age. So probably rent control stuff, 200-300. Newer stuff can be 4, 5, 6, 800, depending on where it is. I've seen stuff sell for $1 million a unit. So it really just depends. I mean, LA's got such a broad market where there's really shitty areas and then there's amazing areas. So
yeah,
a lot of in between.
Yeah, and LA and New York real estate, I mean, that's premium, top of the country, best real estate you can buy. That is a very challenging market in terms of being able to duplicate anything. You have the barriers to entry. So it just goes to show you got out of college. I mean, you did well, but you grinded it out in brokerage. You learned the game. Everything you learned in brokerage, you applied to your own investment career. You got your hands dirty in the operations of not large buildings, right? These weren't, 200 unit apartments, 5 to 20, 30, 40 units or up to,
most of them are 5 to 40. I've got one that's about 80. But yeah, so there's like 20 or so, 22 deals, I think.
Yeah. And you just stuck it out. It sounds like consistency was also an edge. I mean, you didn't make any brash decisions after you made a lot of money in brokerage in 06, 07 or 05, and you put it back in, and waited for the market to turn and found some opportunities slowly and built. So just, I talked to some of my— A
lot of hard work and conservative.
Yeah, exactly. And that's, I see some younger people want to get rich so fast, right? They want the gratification that they have, especially these new syndicators in multifamily. You know that world better than me. These guys will get an Ivy League education and they'll go out and raise $100 million and they've never bought a piece of real estate or apartment building before. So it must be interesting for you to see some of the different dynamics of sponsors and investors.
Yeah, for sure. I mean, the bulk of, and I look at a lot of other people's kind of prospectus materials when they go out. Everybody's got a little bit of a different model, but the bulk of the syndicators, they make their money when they're selling, right? That's where they get their biggest chunk. My stuff, like my investors, it's all long-term hold. I'm not really, there's no plan to sell anything. So I run it as such, and they understand, like, that's another reason why I'm putting a big chunk into them. Whereas some syndicators have put like 1%, 2%, 5%, whatever they're putting in. Part of that might be their acquisition fee they're rolling in. And they start maybe with no money. So that's how they get their start, and then they have a few successes, and then all of a sudden they can put in bigger pieces or do stuff themselves, or
Right.
whatever they're doing. So there's so many different models. That's one of the things I love about real estate. There's so many different product types. There's so many different models. There's so many different things you can do. You can build a management company and make millions of dollars a year of management fees. You could do brokerage from a selling buildings, or you could do brokerage from a lending standpoint. So, I mean, there's just so many different ways. There's property tax appeals, which I've got a buddy who's maybe starting up that business again as maybe values come down a bit.
Nice.
So that's what fascinated me always with real estate, and why when I apply to so many different jobs, so many different kind of spokes within real estate. In 2001, I really didn't know what I wanted to do, because there's just whatever interests you, where you can develop. I mean, there's a lot of people that developing gives them so much excitement that they can see at the end of the day this building that they built, or the people that they're housing, or whatever the story is. So.
For more information on commercial real estate investing, go to patriotholdings.com. Thanks for listening to Finding Your Edge.